absolutely top-notch expert panel on shipping, sanctions, and geopolitics, Nexus challenges in 2025. I'm joined by a superb panel of experts for this subject. Michelle Wiese Bockmann, Principal Analyst at Lloyd's List Intelligence, David Wech, Chief Economist at Vortexa, and Richard Bruns, Head of Geopolitics and co-founder Energy Aspects. And I think that you'd be struggling to find a better panel of experts to inform you on what lies ahead in 2025 for this absolutely critical industry for global commerce, global trade. Trillions and trillions of dollars of trade depends on open shipping lanes, free access to open water, to trade, to ship goods safely. And in 2024, this all became very challenged. We had some of the world's major choke points for the shipment of commodities, primarily oil and gas, the Strait of Hormuz, the Bab al-Mandeb in the Red Sea, coming under threat from geopolitical risk in the Middle East. But we had other risks as well, and some of those are related to climate change that also impacted some of the major choke points around the world, such as the Panama Canal. So a lot of these risks haven't abated. We still have a very volatile situation in the Middle East. We've got a new administration in the US coming in shortly with the inauguration coming up of President Trump. We've got, potentially, will the US seize control of the Panama Canal? Will the US seize control of Greenland? Who knows? Does any of it matter for the shipping industry? Michelle, I'm going to go to you first. What should we be worried about in 2025 if we're operating, any form of shipping, whether it's tankers, dry bulk, you name it?
Well, I think we're going to see an amplification of sanctions being implemented. We saw that already in December. I got some statistics ready. I mean, we alone had 90 ships sanctioned by the EU, the UK, or the US, including 70 tankers and gas carriers, most of those related to Russian trading. We've now seen new risk threat in the Baltic Sea. So I think we can add the Baltic to the Red Sea and to all of those other areas as well. And we have, as we talked about earlier, some mercurial unreasonableness being injected into what is already a volatile situation from January 20. So I think it's going to be impossible to really forecast what's going to happen. We had, military designation of COSCO, the world's largest ship owner, earlier this week. You just can't really throw any more potential things into the mix that can make it more difficult to really forecast with certainty about what's ahead of us in the next 12 months.
And of course, if we wind back the clock almost 2.5 years ago now, the Russian invasion of Ukraine, that triggered a dramatic shift in tanker traffic globally, obviously displaced massive volumes of crude out of Europe coming in from Russia, massive volumes of gas as well. And a lot of those commodities ended up on boats heading into Asian markets. And that, I guess, is what we talk about when we're referring to the grey fleet. And I'm going to come to you there, Richard. The grey fleet, I put this question to, I think, the IEA two years ago when they were talking about sanctions on Russia, when they were talking about clamping down on the risk of the grey fleet, that what can they actually do? Lots of talk, but where's the bite that comes with it? How do you see that playing out in 2025?
I think we are potentially at the beginning of a shift into more significance or relevance to efforts to put pressure on that fleet. It did really grow. It's, hundreds of tankers and vessels now. It has been able to move and sustain that redirection of Russian flows. We've seen Iranian volumes really picking up, a lot of Venezuelan oil also moving on these vessels. But that has all been underpinned by an assumption that the US isn't too serious about sanctions enforcement, and that in fact it's going to prioritize keeping oil prices low. For most of the Biden administration, that has been true, But as Michelle already mentioned, we've seen a kind of uptick in the number of designations and tankers being sanctioned, particularly towards the end of 2024. I think we're very likely before Biden leaves office to get another round of Russia sanctions. And there's reporting that that could be a large number of vessels added to the list. Now, that only matters if the market cares about whether a tanker is sanctioned or not. And that's why the announcement by Shandong Ports Group of a new policy that was going to restrict access for any tanker that is on those US sanctions lists, I think is incredibly significant. If it's already Shandong, that port company handles a lot of the flows of Iranian, Russian into teapot refineries in China. If other privately owned and state-owned ports in China start to do the same, if Indian buyers who are already showing signs of increased caution become even more nervous about handling Russian cargoes, and if more tankers on the water are subject to those sanctions, that I think becomes a real complex picture to sustaining the flows of Iranian, Russian, and Venezuelan at the levels that we've seen. And I think at the level that most in the oil market are assuming are just going to be manageable and continue through this year. And this is all before we get to the Trump administration and the return to maximum pressure Iran sanctions. So I think there's plenty of scope for increased disruption and more relevance from sanctions, but it depends both on the policymakers who are announcing the sanctions and on the reaction function and how much the market cares or fears the impact of those sanctions.
Because, I mean, Dated Brent's on a bit of a tear at the moment when we were pushing an 80 handle earlier this week. I think it eased back a little bit yesterday, but we're still in the high 70s. Where do you see crude going as a consequence of this?
Well, I think we can definitely see crude moving and Brent into the 80s this year. There's still big headwinds. Demand growth is underwhelming. We've got quite a lot of growth outside of non-OPEC, outside of OPEC Plus, although that did disappoint in places like Brazil last year. And I think there are question marks for some of that growth again this year. But critically, we've got a lot of OPEC and OPEC Plus spare capacity on the sidelines. So I think prices can move higher. I think the market will be tighter than a lot of consensus estimates suggest. But I think that tightness will then allow Saudi Arabia and the other OPEC producers to start bringing barrels back. So there's, absent a major geopolitical escalation, I think there's limited pressure for Brent to move kind of to the 90s or $100 a barrel for any length of time, but it can end up averaging higher than last year. And I think it certainly in the short term can keep grinding upwards because there's a series of factors that are more bullish than bearish.
I think you mentioned it towards the end of your point there that the prospect that OPEC may return some barrels to the market in the first quarter. David, I'm going to come to you on this. What do you see the impact on, if we look at tanker rates as a consequence of this? Potentially if you get more oil coming out of the Gulf, to a certain extent that could be offset by more sanctions, making it harder for countries like India and China to buy Iranian crude, to buy Russian crude. It's a balancing act. Where do you see rates going this year?
Yeah. First of all, I want to say I agree with what has been said so far. And I think the level of uncertainty in the market is extraordinarily high. Yeah. But that doesn't necessarily mean that it will be a particularly volatile market. Yeah. So uncertainty and volatility is not necessarily the same thing, or it's not necessarily implying each other. And I think generally we are simply in a situation where supply and demand levels are not providing particularly reasons for rising prices. Yeah, so we have seen a clear slowdown in seaborne flows over 2024 trend-wise. I think demand has disappointed at this point of time. Things are continuing to suggest that they will disappoint. As Richard has pointed out, supply potential is ample. What I like to point out always is with all the data we and other players are providing in the market, we know much more about the market. We know that we have about 8 billion barrels of oil in the supply chain. If you use that oil to come up, for example, to make up for a loss of Iranian flows to the market of about 1.5 million barrels per day, you can do this in theory for 15 years. Yeah. So basically, these are amid the factors why all these uncertainties will not necessarily drive prices higher. Talking about the tanker market specifically, we have clearly seen weakening prices across the board over the last couple of months. We have generally a very ample fleet. Yes, the vessel-specific sanctions, I think that's a crucial point to look at, and the Shandong point made by Richard is very important to look at. It goes a bit against our expectations we had on China, and I think the crucial question here is always, do these vessel-specific sanctions target to make the handling of these barrels more complicated and basically weigh on the prices or the money Russia and Iran are earning, or is it really targeted to eliminate the flows? Yeah? And that's the crucial question, yeah? Because I think it's well possible. We're seeing ballasting vessels building up in the Baltic, in the Black Sea. So that appears to be linked to the vessel-specific sanctions. We appear Iranian flows stuttering a little bit, but will this be the permanent solution? Will China be willing to forgive the advantage of taking Iranian barrels in the long term, in the medium to long term? I personally don't think so, but we don't really know. Ultimately, I want to make one final point here. What we have seen last year, one of the crucial observations for me was once again this massive flexibility the trading community is putting or is providing to the market. When we had this need to reroute barrels via the Cape of Good Hope to the Red Sea due to the Red Sea situation, we had this massive development in cleaning up supertankers, VLCCs and Suezmaxes, and bringing clean products for one voyage on a previously dirty vessel to the European market. That has taken a lot of heat out of the market, and I expect the flexibility between the clean and dirty tanker fleet to continue into this year. Traders will keep that in mind, and that's also one of the factors that can handle with uncertainty and volatility. So ultimately, I think 2025 will be a very interesting year, but it is well possible that prices behave in a pretty similar pattern as last year. Of course, in the short term, there can be ups in line with speculation, but from a fundamental point of view, I'm neither particularly bullish nor particularly bearish.
Michelle, you look at the Red Sea quite closely. I know I follow a lot of your work, follow you on social media, commenting on what's happening there a lot. You know, one of the interesting things around the conflicts surrounding the Red Sea and the Houthis targeting of shipping in that area is that it kind of took, you know, global trade, the shipping industry back to a pre-1850s world. You know, it's been very good news for Durban, for Cape Town, for that route around the Cape of Good Hope. Do we see that reversing at all? Have things kind of cooled down a little bit now in the Bab el-Mandeb to kind of return things to normal? Are we starting to see a reversal of that new route where shippers were taking longer to sail to port, going that longer route because it's safer? Are we seeing any change in 2025 to that situation?
What we have seen is that there have been fewer attacks on shipping, but I don't think we've seen any changes in flows yet. I mean, shipping and global trade is remarkably resilient. And, you know, that recalibration of global oil trades was, you know, the second time that it happened in 3 years, really, because it recalibrated the first time after sanctions were imposed on Russia. So I think, you know, we're looking at most of the Russian crude is going southbound through the Suez Canal and going through there uninterrupted because they're not a target. So we've seen about a 40% reduction in flows southbound and about 60% northbound because a lot of that is refined products.
So if I stop you there, so to link that to sanctions, because this is what I find fascinating. So we know the Russian grey tankers are going through the Suez Canal.
Yes.
The global policeman of international waterways, the US Navy, various international marine organizations with a military capacity to control that. Why don't they just board these ships and turn them back to Russia? Why don't they seize these ships? What's stopping them?
Well, there's an international maritime convention called UNCLOS, and these vessels have what we call the right of innocent passage. And this is proven to be, you know, one of the reasons, you know, the ship is subject to the flag that it's flying. And so this is one of the reasons why sanctions have actually began to have an impact is because in the UK, for example, that have really stepped up sanctioning tankers, they've actually accompanied that by going to Panama, Barbados, Gabon, some of the countries that are providing flagging service for their vessels. And they're saying, look, we've sanctioned these vessels. We want you to deflag them. And so what's happened as a result is those tankers are now going to fraudulent and fake registries. And I think 15% of the dark fleet, as I have with methodology, is now either flying false flags, fraudulently saying they're flagging their prior flag, or they are using an unknown flag. So that has really taken the darkest elements of the dark fleet right to the fringes of maritime transportation. And when you look at those numbers generally, 33% of the dark fleet is now subject to sanctions. If you add in the government-owned, the National Iranian Tanker Company and Sovcomflot for Russia, 42% of all vessels transporting oil are now subject to sanctions. And you have governments pressuring those maritime service providers and the countries that are supporting them. So really, there's that element. And then, of course, you look at China, which is the destination for, let's say, roughly most of that crude, and about 20% of Chinese seaborne imports is either Russian, Venezuelan, or Iranian. So this is where the pincer movement comes in. If China is pressured, and especially if their banks are under pressure not to allow those sanctioned ships to come in, how will global oil flows recalibrate to allow for the pressure being imposed on those flows by Western regulators?
And this also assumes that everyone sticks to the international rules-based system of governance, which is breaking down, right? And that's my question, to what extent these marine internationally binding laws, frameworks, governance that you mentioned.
They're not being adhered to. So you've got a division. You've got normal trade, and then you've got your sanctioned oil trade. And the respect for international maritime rules and conventions is clearly being breached at many levels. But because of the way this system is structured, as long as those vessels let's say they call it Iran, mostly they spoof their location, so you have no vessel tracking to show that. They call it Iran, they go straight to China, they remain under the jurisdiction of the port state, the flag state, and then the port state again. And so it's pressure at the port state destination, which I think is going to be really important in 2025.
Very, very interesting story in the FT earlier this week about the Royal Navy in the UK. Of course, the Royal Navy no longer rules the waves, but it's still a significant part of the global policing of international trade routes, using AI to help monitor the grey fleet. And when I read that story, I wondered, what is the Royal Navy's interest in the grey fleet? Normally not a thing that they would seek to have oversight of. So I guess the question is, how far are we away from some of these more direct intervention? And that brings me to you, Richard, and the Strait of Hormuz and the Persian Gulf, because we nearly got to that point later last year, with the boiling point that Israel and Iran reached with each other. We had the Iranians, a lot of evidence from tanker tracking, from satellite imagery of the Iranians sending tankers away from their main loading point in the Gulf. There was a lot of concern, I believe, in the market at that time. Certainly, we were reporting this from our sources in the market that Israel could actually target these Iranian tankers in port. So it's not totally beyond the realms of imagination that this could happen. A first, almost, Richard.
It's always been there or hanging over the market for decades as a tail risk. And, you get an IRGC commander making some comments about how they can rain fire on the Strait of Hormuz, and you get some headlines from that. But I think the calculus for what would actually lead us into that scenario and what would Iran stand to gain from trying to do that, and what kind of reaction would it face, has always been a strong disincentive. But I do think that Iran-Israel tensions are going to remain high this year. And I think Iran-US tensions and more broadly, Iran's tensions with all of the Western countries that have been so focused on its nuclear program are going to be a key topic for markets to follow this year. There's a lot of concern, not just on the incoming Trump team, but also in European capitals about the expansion of Iran's nuclear program. And there's a fear that because Iran's regional proxies have been so diminished, Hezbollah has been heavily degraded, Hamas the same. The Houthis have become more prominent, but are losing a lot of their capacity over time. So if Iran can't rely on regional proxies to deter Israel and to protect it, then does the attraction of developing a nuclear weapon change and become higher? And in that scenario, you can definitely see some big kind of escalatory risks. They're not certainties, and there will be an effort, I think, and a push for diplomacy first, but that is all likely to encourage more use of sanctions. And I think it's going to create lots of uncertainty, risk, all of the kind of the things we've been talking about, even though I think that Strait of Hormuz closure scenario remains at the kind of outlier tail risk and is not that practical, but it's at that 1-2% chance that the market can't totally dismiss given its importance and given the kind of just the volumes that travel through it every day.
Because it's no longer a question of being able to de-risk yourself from the Persian Gulf. Of course, we can go back 10, 15 years and there was definitely a concern. And this is, sort of a legacy from the previous tanker war, from the overthrow of the regime in Iraq under Saddam Hussein, that governments, producers in the region on the Arab side of the Gulf wanting to explore alternatives to have ports outside the Strait of Hormuz. Obviously, you had the expansion of the port in Fujairah. The UAE are building strategic stockpiles there. There has been talk in the past even of a huge canal being built from Dubai linking to the Arabian Sea across the desert. Of course, Saudi Arabia has opened up a new export capacity on its west coast, bypassing its to a certain extent its exposure to the Strait of Hormuz. But what's changed is drones and technology. We did some research. If you look at the number of attacks on shipping in the last 2 years, that where ballistic missiles were used conventional munitions were used to target those ships, that air defense predominantly was able to defeat those measures, and there was no damage caused. But with drones, it's been proved to be far more difficult. And we've actually seen, and this is what I found amazing, and this is bringing it back to the price question. What is it going to take to have a major event that would shift price? Because, we've seen shipping in the Red Sea, actually sink as a consequence of this. If you were to have asked me 10 years ago what impact that would have on oil markets, I'd say, well, we should be at $150 barrel just based on the risk premium, but it's not there. Is the market underplaying this?
I think, well...
Oh, David, I'll go to you next on this. Sorry.
Yeah. I think it relates. I mean, first of all, a closure of Strait of Hormuz will simply not happen. Yeah, I mean, perhaps for a day or two, but not for longer term, because you have to see the interests. Nobody has an interest in that. Yeah, I can't see anybody except perhaps for Russia. Yeah, that has an interest in the closure of the Strait of Hormuz. Yeah, so this is not happening. Why prices are not reacting? I think that's related to what I said before. Yeah, the market is today simply aware that we have this 8 billion barrel stock coverage in the supply chain, basically, and that's so you can cope for very long times with the outage. So for prices to rise, you have to have a major supply outage or a huge demand spike, and both doesn't look particularly likely. If you allow, I'd like to follow up quickly on what Michelle said before on the ship-specific sanctions. So I think one point that is important here is that the overall fleet size, especially also for VLCCs, is pretty big relative to demand. So what a lot of ship owners are actually hoping for is that this vessel-specific sanctions are leading to finally an increase in scrappage rates, because we have for many years seen very low scrappage rates. So basically the fleet size has been been building, and there is a lot of old tankers that is not yet in the dark fleet, but that can be traded into the dark fleet. And so that means basically that these vessels being designated does not necessarily mean that there is a shortage of vessel. Iran has about 5 times as many vessels as they actually need to manufacture the flow, if they were super efficient with that, like Saudi Arabia. Yeah? So there is spare capacity there, but it is an important point to look at. Yeah, the fleet overall may well tighten in 2025 if finally vessels are basically taken out. One additional comment, of course, as has been alluded at, there is a lot of ways to bypass rules. Yeah? Spoofing is a key element. We're observing a lot of STSs. So what can, of course, also happen is that, and is happening, that the Iranian oil is traveling with the sanctioned tankers towards China, and then basically signals AES is turned off, and it is passed on to a not yet sanctioned tanker, and this not yet sanctioned tanker is discharging into China. Basically, all the flows into China last year, the very huge majority of it has been on non-sanctioned tankers. Yeah, so China has all the time not taken in sanctioned tankers, but that doesn't mean that the sanctioned tankers haven't been involved in the movement of the cargo.
But David, to come back to you on that, and to what extent is a blind eye being turned to this?
Sorry,
well, the reality is that if you get tougher sanctions, if you got a more aggressive policing of the grey fleet, of STS, of these various nefarious ways that sanctioned crude and commodities is being transferred on ships to port, we would have that high oil price environment, and that has a dramatic impact on global economics.
Yeah, I think the point is exactly that. The sanctions policies, as Richard has alluded to, has always been a function of the price. Yeah. So recently, the oil price has been relatively low. That has given a window of opportunity to administrations in the US and in Europe to increase the pressure on Russia and Iran. If something happens and prices are rising, I think you can basically bet that the intention or the level of sanctioning will go down. Yeah, because ultimately, again, pretty much everybody is aligned that we want the oil to flow in the necessary quantities. Yeah, so that's why I'm not thinking that we will run into some real tightnesses in terms of vessel next year. I do want to make one comment because we're coming towards the end. I do think the real geopolitical risk in 2025 is tariffs. Yeah, it's US tariffs. It's the Trump administration that can really change oil flows drastically if for example, import tariffs are implemented on Canadian and Mexican imports.
Michelle, so we're coming to the end of the session now. I'm going to go to all of you. David, you've had your shot with that. So tariffs, that's the big concern. 2025, are we going to see that become a big factor impacting shipping globally? Michelle, 2025, what should be keeping us awake at night?
Oh, that's a big one. I can only say that I think the only thing that's really going to move the needle when it comes to whether or not the enforcement of the sanctions is any way effective, whether or not you agree with whether or not sanctions are correct, is if the US decides to take action against China. I mean, I know, David knows, all of us here on the panel, we monitor these vessels each and every day, and I've got a complete list of 700 vessels in the dark fleet. I know the administrations and regulators know who they are, and it's whether or not they're going to take action. If they take action, then I think things are going to be quite volatile.
So more action against the dark fleet, more robust policing of the dark fleet, more intervention in that flow of trade.
Yeah. If will the new Trump presidency, will he take action against China for their ignoring their unilateral sanctions on Iran, especially because that's 1.6 million barrels per day at the moment.
Richard, to you, 2025, what's keeping you awake?
I think that downside risk to Iranian flows is going to be the big one to watch, to kind of echo Michelle. And I think the other side of it, which is maybe not discussed enough, is that China may not be that fussed about defending the rights of private teapot refiners to access that sanctioned crude because Beijing wants to reduce the capacity, is frustrated about tax compliance from those refiners. So I think we may not see as much diplomatic pushback and even a bit of willingness, and perhaps this Shandong announcement is the first early sign of that, that this could be a concession or a bargaining chip for China, reducing these flows in what is going to be a much broader US-China, Trump-Xi confrontation that I think is going to be the big overriding story, along with all the noise and the tweets or the social media posts we're going to have to deal with. I think US-China confrontation is the big meta story for the year.
So 3 big ideas there to finish on. Looming confrontation between China and the US on a range of issues. The concern over Iran sanctions, tariffs, looming tariff war potentially, which you highlighted there, David and Michelle. This continuing issue over dark fleets and how they're policed and how they'll be clamped down upon. A lot to think about.
US-European relationship I would add as well.
And that one to throw in just at the end. How could we forget? But we did forget climate change. There was no mention of that. And of course, we discussed before the session the impact that falling water levels have already had on the Panama Canal. A very interesting report I read earlier this week in The Guardian about how by 2070 you could get a 1 meter rise in sea levels, according to the International Cryosphere Climate Initiative's latest report, and what that means for access to oil ports. So lots to think about there. Lots to look forward to and prepare for in 2025. Thank you so much, Michelle, Richard, David. Absolutely superb analysis. I look forward to meeting you all in the coming year. Thank you.
Thank you.
Thanks very much.
Take care. Bye.